Good morning and welcome from Trend Signal for our workshop reviewing the data and events for the week beginning the 16th of September. An interesting week. Last week, equities continued their very impressive performance. We had triple-digit moves on 3 days last week in the Dow. Europe's still also doing particularly well. Whilst the US dollar has been rallying against EM currencies over the past month or so, it has moved significantly lower versus the euro and sterling. Sterling has been very, very strong, especially on the back of the employment data last week. But in the US, it's mixed to weak data, really, that has sort of increased the debate about quantitative easing and this topic of tapering. Overnight news, really the Syrian news, the accord between the US and Russian foreign ministers seems to have taken the heat out of that particular topic in terms of any imminent military action by the US. European foreign ministers are going to be meeting to discuss this. I would have expected that particular news to have aided the markets this morning anyway. I'd have expected to have seen on the back of that the US dollar slightly weaker. All this ahead of the key FOMC policy announcement on Wednesday. But the withdrawal by Larry Summers from the race to be the next chairman of the Federal Reserve, I think, has really propelled the markets significantly higher this morning. Larry Summers, a noted hawk, has been replaced by the front runner now in Janet Yellen, who is the vice chairman of the Fed. Ben Bernanke is going to be leaving the post in January 2014. So the replacement now, we believe, the strong favourite now is Janet Yellen, which is all sort of more interesting to a certain extent that she is the front runner, because Larry Summers, one of the reasons why he's withdrawn is because of 2 or 3 black marks or blotted copybook issues, where one of them when he said that, or believed that women were less able, less aptitude in maths and science. So it's quite ironical that perhaps Janet Yellen may be the next chairman of the Federal Reserve, and the expectation is, being a dove, that she will keep more of an accommodative policy, a monetary policy, which has weakened the dollar significantly. I'm not altogether sure that this gap down in the US dollar, the gap up in the euro versus the dollar, or sterling against the dollar, will be maintained. This is a very important week, and I'm going to get onto that in a second, but certainly the dovish credentials of Janet Yellen have resulted in this move that we've seen first thing this morning. Let's have a look at the data then this week. It's an important week, and I think we all know why. All to do with QE tapering. We have bits of data in between, but I think rather than focus on all the bits of data coming out this week, the key ones, the ZEW Economic Sentiment Indicator, a further improvement there from the respondents, jumping to 45.3. We also have the minutes from the MPC meeting. We don't believe that there will be much garnered from this. Mark Carney's already had a bit of a grilling by the Parliamentary Select Committee last week, and I think the markets have basically spoken as to what they think of Mark Carney's long-term guidance. There is a significant disagreement between the markets and Mark Carney. Anyway, for now, that is less material than the FOMC meeting starting on Tuesday, culminating on Wednesday with an announcement on quantitative easing. The markets basically are expecting the Fed to taper this third round of quantitative easing. Remember, this is the third round of quantitative easing, started in September 2012 when the Fed said it would buy $85 billion worth of long-dated securities with an unspecified total amount. So until they decided otherwise. This is a comment. This is started from the comments made in May by Chairman Ben Bernanke that they would consider tapering, and that is now expected this month that the Federal Reserve will announce tapering of between $10 to $15 billion per month, expected to end the current QE bout by mid-2014. So this current round, or this third round of quantitative easing, will end by mid-2014. So US dollar bonds and equities will be very, very sensitive to this. No tapering, and obviously the US dollar will fall. That's not what's expected though. And obviously if there was no tapering, equities would rally along with bonds. A bigger taper, I've got a feeling that perhaps the markets will perhaps be more sensitive to no tapering, but if there was a bigger taper than expected, that US dollar would rally significantly and equities would fall along with bonds. So a very, very important day, or evening I should say, on Wednesday. We then have on Thursday the regular weekly unemployment claims. We had a bit of a statistical glitch the previous week at 292, but nevertheless the employment situation has been improving, although the Federal Reserve does have concerns over that, with the number of people actually leaving the workforce, which is causing the unemployment rate to drop rather than the number of people being employed. Existing home sales, that's an important bit of data, and then we have the final manufacturing data out. We do have the first bit of data actually out on Monday from the Empire State Manufacturing Index, which is a less important one, but the very important one in the shadow, I should say, of the tapering news the previous evening will be the Philly Fed Manufacturing Index, expected to improve further at 10.5, and then we have really nothing much towards the end of the week, in fact, just a little bit of the CPI inflation data from the Canadian dollar, and that's it for the week. Most data will be overshadowed by the FOMC. If I've missed anything, I apologise, but as I say, it is a week defining, if not the defining moment this year, this financial experiment. With it coming to an end, the outcome we're not altogether clear on. But as I say, the Fed at some stage have to start ending this experiment, as it appears that the economy starts to be in its sort of post-crisis year, first post-crisis year, as rates look as if they might start to normalise. Thank you very much for listening. We will reconvene again on Thursday at 8 o'clock. Good luck with the trading. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.